Going on, trading family? So this is going to be an end of the week recap. Okay, so we're going to talk about what moved the markets. We're going to go over inflation data, rate expectations, dollar, equities, gold. Okay, and also at the end we're going to talk about what to expect moving forward. Okay, so if you like these breakdowns, you like these weekly recaps, if you also like the weekly preps that I do on Sundays, give me a like, a subscribe, and also share it with another trader. Hopefully, this is very helpful for you guys. And if you have any pairs that or other central banks that you guys focus on that you want me to help you guys out with, leave it below in the comments as well. Okay. So appreciate you guys' help and going through this journey with me. All right. Because it's exciting. I really love helping you guys out when it comes to this as well. But let's talk about inflation data. So that's going to be the main focus. This week we did have U.S. Consumer Price Index, right? That's CPI, and then we had Producer Price Index (PPI) reports for August. The big picture, inflation is creeping up, right? So they're expecting higher inflation due to tariffs, but there is mixed signals that we've been getting so far. Okay, looking at the print, just to show you guys a quick recap, just for you guys that don't know, this is the Discord channel. Okay, so if you want to be a part of the private group, so you could get access to my live calls, join the trading community. We got everything that you need here for fundamentals, to learn technicals, be around a really good trading community. Just go to the link in my bio. Join the Discord so that you could be trading live with me as well, just like how we did these events. So this week was kind of odd because we did have PPI first. Normally, PPI is after CPI, but this time they did it a little different. So, as we can see that the first print, we see that PPI did fall drastically, right? You could just see right here is the core PPI coming in at 2.8%. This is the preferred measure of inflation for the feds. And the trend of inflation definitely is coming lower. So we got this first, right? This was the print that we had first on Wednesday. And we didn't really see any major reactions. But the problem is when we had CPI the day after, we just had this monthly that did come out at a zero point 0.4, but nothing drastic to the upside. But that did give us a little bit of stickiness confirmed when it comes to CPI. But it didn't make a huge impact, right? Because with both of these prints together, we did overall see a dovish reaction in the markets. Okay. As you can see, we already went over that. But this is what led to really good tradable opportunities. But before we look at the charts, this is what they focus on, right? This is what the feds look at. They look at the graphs of pretty much how inflation has been going, right? So you could look at it from this year. Right. This is one of the reasons why they're saying inflation is sticky. So as we can see, this is core CPI year to year. We had a big drop in January, and then we could just see that all the way till March till May, we just stood flatline, right? We didn't really see CPI do much after that. And then after May, all the way to July, right, we could see that inflation did rise. So this is what Jerome Powell was talking about regarding inflation is going to temporarily rise due to tariff expectations. Okay, so this was the main focus that we was paying attention to. This is where the markets was actually focusing on. So looking at this, we wanted to see if this most recent print of August was going to actually rise or go lower. The fact that the CPI stood the same, I feel like that kind of gave the markets saying, okay, maybe we're at the peak of higher inflation. Like he was expecting high inflation, but maybe we're at the peak right now because you could just see that it's flatlining again, right? So are we going to see next month? Is inflation going to come in lower or higher? That's going to be pretty much the judge. But this really didn't give us that much of an impact. Okay. So let's just like overall, if we look at the trend of inflation, right, 5 year period, we could just see from like, you guys remember 2020. Uh, but you can see like August 22nd, like you could just see inflation just has been decelerating from all-time highs. So we're still pushing lower, but you could just see like right here in the bottom that we're just moving sideways. And that's what they're concerned about. We're not seeing a steep decline. We're just seeing price act like we see inflation moving sideways. So that's just CPI. All right. But that's just to give you guys a good visual right now, looking at Uh, Now looking at US PPI, right? So this is going to be the next focus. As we can see, the preferred measure, right? This is a 2 year period, but let me just go to the 1 year. As you can just see, this one is actually pushing down lower. Uh, Yeah, for this year, you can see in January, big drop to the downside, right? And we did have an uptick in July, which was concerning. But for this month now, seeing that PPI is pushing lower, this goes back to the markets kind of presetting, saying, okay, inflation is lower. We don't have much to worry about. Okay. So the fact that inflation is dropping, this is one of the reasons why we saw that the markets, right? Just looking at the dollar overall, like what do you guys think happened? We had a big spike to the downside, but this happened during CPI, which was pretty interesting. I wanted to see this reaction from PPI, right? I wanted to see it Wednesday, but we got it Thursday, and it kind of showed that like CPI wasn't really the catalyst for it, but just the overall picture is what led to those downside moves. Okay. So what we're going to focus on, what this tells us is that consumer inflation is still sticky, especially in the housing and food travel components, right? Like hotels. But we're seeing upside pressures of inflation, like the producer side is easing a bit as well, right? But this gives the feds more room, right? It's not a clear signal, but it does give them room to give us that 25 basis point cut. All right. So that is the overall of what inflation is going through, just so you guys could like have the eyes and understand from an analyst perspective. Okay. But now let's talk about market reactions. Markets is overall still expecting the feds to cut. So if we look at here, this is a good website you guys could use, like the Fed Watch tool, right? CME Group, where you could just see the expectations is pretty much priced in at 100% for the meeting next week. Okay, so 100% priced in for a cut. And this is one of the reasons why when we see an economic data moving forward, right? This is what this is what increases those odds for a cut. Okay. But now, since we already know that September is going to be a cut, we most likely understand that October might end up being a cut as well. What we want to focus on moving forward, right, when it comes to inflation expectations is October gonna is October going to stay at a 25, or are we going to see a chance of a 50 coming up? Okay. Right. So I think that's going to be the odds moving forward. Just double check. Yeah, so are we going to see that moving forward? What about December? Are we going to see that being a actual 25 or 50? As of right now, markets is expecting a cut for October and December. And leading on to January, are we going to see more cuts, right? We're actually seeing more easing. So upcoming data, guys, is going to impact more of we're going to be looking at October, December, January, March, and most likely April. Let's see what happens. But as we can just see, as of now, we could see that the markets is actually expecting cuts all of next year. This could actually change if we see that the labor markets isn't easing as bad, or if we start seeing upside in inflation. That could change the whole trajectory. But just a side note, Jerome, this is the market's expectations. Jerome Powell could still do next month, right? I mean, at the end next week, and still not cut rates. He can still pause rates, right? So we just have to be prepared for that. But what you guys think? You think that he's gonna cut rates like definitely, or you think he's gonna pause? Are you expecting a 50? Like which months are you guys expecting a 50? Right? Because we have to come together and try to have a bias together as well. So your thoughts do matter too, and it could help others. Okay. So that just a good outlook. So now we're gonna talk about the dollar. So the downside of the dollar did happen on CPI, right? We got this really big move. And after that move, we just consolidated. But overall, if you guys been messing with me for a long time, right? I've been saying sales in a dollar is the main focus for this year, right? Because the feds are going to cut rates regardless. And every time we get some upside price action on a dollar, it's just setting up for better sell opportunities, right? We could catch better sells, right? Because when the feds are now leaning into a cutting state, from a fundamental perspective, it gives you a bias on the US dollar. It gives us reasons to look for sells. Okay. So that's why I think it was the best option, taking advantage of dollar downside. And when we get weakness in the dollar, right? Just to give you guys an example, weakness in the dollar is also weakening the yields, right? So you can just see back here, we can see Wednesday, the yields push lower too. So when that happens, what do you think gold did, right? So now looking at gold, like we was looking at gold right here over the live call because gold was right here at price action, and this was yesterday. And what gold did, it did break structure and it just gave us those buys for the rest of the day because of the weakness of the dollar and the yields because of interest rate cuts is now being priced in, right? They're expecting the Feds to start cutting rates. That supports gold upside. And that's why we had that direction in the markets for gold. Okay. So that's if you guys took advantage of that, I felt like that was a really good trade if you guys did and understood it on top of that. Okay. And then there's no real reason to change our bias because this is the direction of the bigger picture. So now moving forward, we're going to go to equities. Okay. And looking at the stock market, right? NASDAQ, US 30, S&P, usually NASDAQ and S&P move together. US 30 kind of has his own mind of itself sometimes. Okay. So just remember that, guys. But why did equities push higher for the week, right? After the rate decision, after CPI, after PPI, equities push higher for the week. Why is that? Because of the markets, again, pricing in expectations of weaker inflation, right? Weaker inflation overall. They wasn't afraid no more about inflation rising. They're still, regardless, they're still expecting the Feds to cut rates and still cut rates for all through next year. So this could change at any time. But for the stock market perspective, cutting rates is good to buy the stocks, right? Lower interest rates is good for businesses, is good for companies. So this is why we saw this bullish price action. All right, guys. So hopefully this is very helpful. If you guys took advantage of the buys, you're not if you are if you're one-sided, like you see these kind of wicks, you're not being scared by that, right? You're looking for better price entry points to take buys, right? Because we already understand that equities should be pushing higher from a fundamental perspective of rate cuts. All right. And even today, like we saw that equities did push higher from US, it was Michigan sentiment data. So inflation expectations came out lower and Michigan sentiment in business yeah, so inflation, yeah, it kind of wasn't a big opportunity today. But overall, this did push up higher because it still followed the bigger picture. All right, just wanted to get you guys to really understand that part. So it could really help you overall. So now what is the Fed's gonna do next, right? Like that's pretty much the bigger picture. Like we got upcoming data as well, but 25 basis points is still the base case. Okay, if inflation continues to surprise upward, the Feds might still be cautious. Then we'll probably see the opposite direction, right? We'll see equities pushing lower. We'll see dollar pushing higher if we see that inflation does rise or job markets start getting strong again. Uh, Overall, I like the idea of the Fed still cutting rates by 25 basis points, but at least they're cutting because the only fear that I had this week was seeing a risk off market because of the weaker labor market data. But I'm gonna talk about that in previous videos. I did that already on YouTube. So if you want to learn about the labor markets, just go to the previous videos that I posted. Okay. But overall, upcoming data that we're going to focus on more job data, labor markets, right? NFP next month is going to be important. We want to focus on inflation. Right. So those are the stuff that we want to pay attention to moving forward. All right. So now that's wrapped up. I'm gonna talk about the ECB rate decision, okay? Because we also had that as well this week. Didn't really we really didn't focus on it because it was kind of more like kicking the can down the road kind of meeting, right? So the ECB held rates this week, right? There was a discussion of when easing might start, but nothing was immediate, right? So she kind of came out like President Lagarde did come out and say that we're just going to remain data dependent. That's pretty much all she really came out as. Okay. So really nothing that came from the ECB meeting because we haven't had economic data lately from Europe that could really give us an edge. Like an example, that last night we did look at inflation data, right? Right here for Europe. As we can see, it didn't give us an edge. It came out as expected as the previous. So we really don't even have forward guidance when it comes to economic data. But that's the stuff that we pay attention to, when it comes to rate decisions. But the tone of that meeting was just, we're data dependent. We're not going to give an answer. So kind of like leave it alone. All right. The UK developed markets are watching inflation growth risks as well, but less volatile than the US recently. We had UK GDP. This wasn't a really, it didn't really give us much, but we saw a little spike to the downside because of this miss right here at a 1.4, but it ended up as the previous. So really not getting a clear edge overall. Okay. But it showed a slight decline in UK's growth. All right. So that's why like we did see a spike to the downside in the UK. Now, what should we keep in mind? All right. I feel like the best opportunity, I like dollar weakness moving forward. I think that is the best opportunity from a fundamental perspective. I personally don't like selling from the lows or even equities buying from the highs. I would prefer better pullbacks so you guys could take advantage of some better trades, right? I still like the idea of gold upside longer, more of a macro perspective. Obviously, there could be some pullbacks in the markets due to profit taking. There could be economic data or any headlines that could cause opposite direction. So, moving into next week, right, the focus is going to be about the rate decision. So caution and just letting that pass, we might get an edge. But don't be surprised if we see that the markets react before the rate decision. So we could possibly see like dollar pairs pushing lower, right, before the rate decision. And like GU will push up, EU will push up, AU will push up before the rate decision, just because they're expecting the cut to happen already. They're not going to wait till the rate decision just to start moving in the direction. They already know. You get what I'm saying? So don't be surprised if that starts happening. All right, guys. But other than that, hopefully this video was helpful for you guys. If you guys, again, if you're interested in the Discord group, so you could trade live with me, just to give you guys a sneak peek, right? You get access to, this is my Reuters terminal and everything in here. You could click it, you could watch it for yourself, news headlines, economic data that's coming out. Also, you get news headlines coming here. PIQ, also you get their news feed for economic data. We got everything that you need here. All right. If you also want to access the fundamentals course, it's still available to the group members. So if you join the group, you'll be able to get access to the actual course as well. Hopefully this was helpful, guys. Hopefully you had a really good week. And yeah, guys, on to the next video. See you guys soon.